fear. The stage is set, all engines go. Welcome to the angle. Let's start the show. Hold on tight, the stage is set. Dig in deep with no regrets. Red and green bars leading the way. Welcome to the angle. No time to delay. Markets rise and markets fall. Atomcash is ready to answer the call. While the bulls charge hard and the bears dig deep, the angle will keep you on your feet. Hold on tight, the stage is set. Dig in deep with no regrets. Red and green bars leading the way. Welcome to the angle, no time to delay. Cashing in on the highs and lows where the wind of fortune constantly blows. No looking back, keep your eyes on the prize. Fuel to run with a fire that never dies. Hold on tight, the stage is set. Dig in deep with no regrets. Red and green bars leading the way. Welcome to the angle, no time to delay.
Good morning, everyone, and welcome to the most entertaining, intellectually stimulating financial podcast in the entire world. You're watching the Atomcash Angle, the show that flips the switch and floods the system with straight financial voltage. I'm Adam Cash, and I'm bringing you the firepower your financial life may have been missing. Now, whether you're new to trading or a trading savant, I aim to turn complexity into clarity with a shot of adrenaline. And today, we are already shaping up to have a very interesting day on the stock market, as it was yesterday. We made a new all-time high on the stock market yesterday. If we zoom in here, very, 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 very nice little green bar there, back to us at the AEMA off of, after questionable red day, prior day, and made a nice little push up to a brand new all-time high on the stock market. You love to see it. Now, in the pre-market right now, we are green just a little bit, as you can see here with our Qs and our IWM. A little bit of a mixed bag, but pretty flat overall off of yesterday's decent little push here to the upside. And most of that is really perpetuated by NVIDIA getting a price upgrade to $300 a share by an analyst. So right now that's pushing up at 192.52 in the pre-market, while our other Mag 7 names not looking so great in comparison. Microsoft pretty flat, Apple down a little bit, Tesla down a good amount, 1.5% here in the pre-market, Amazon flat, Meta flat, Google flat. So kind of a mixed bag here, but a lot of the heavy lifting right now being pulled off by NVIDIA as we sit into the pre-market. Now, we've got a lot to talk about. We got a lot going on today, and there's a lot of stocks I want to bring up to you guys during the show today. So if you like individual names, you want to trade individual tickers, I've got a lot of equity that I've recently moved some money around and added into that I'll be sharing with you guys. So if you want to stick around for that, feel free to. If you have any other names that you're interested in, maybe drop them in the chat. We'll get to that at some point today. But before we get too deep into the weeds of what's going on today on the stock market, like I like to do with you guys every single time I'm live, we're going to head right into the meat of the matter. What is going on today in the stock market? What news catalysts that we have to watch out for? Now, right now, pre-market, we've got the Fed Community Bank Conference with Powell having pre-recorded remarks there. So that's happening right now. We also have a Fed speaker right now and the Treasury Secretary speaking. All of this right now, between now and open, essentially. Throughout the day, we have Trump hosting a cabinet meeting at 11 o'clock. So as I like to say, prepare for the randomness of what could be said there. And we have Barr speaking as well as Kashkari. I can never say this guy's name right. And Barr again. So we have two Fed speakers. That's going to be right at 12:45 and 1 o'clock. And then on top of that, you have the 30-year bonds. So here's the best way to look at bonds. Every time you see bonds in your news catalyst, the longer term bond, the higher effect it will have on the market. So that actually could be a decent catalyst, depending on how the 30-year, that obviously will affect the market. But what I'm trying to say is whenever you see the 5-year bond, it's not as much of a concern for an equity trader as it would be the 30-year bond. So you're going to want to watch that 1 o'clock. You might get a little bit of volatility there, depending on how that comes in. Then you also have Trump again at 3 p.m., speaking with the Finnish president. Again, you never know what happens there. And right before close, Bowman speaking. So another Fed speaker to round out the day. So a very catalyst-driven day. If you came to the Monday stream, you saw how I mentioned how Tuesday, Wednesday, Thursday, the meat of the week, is going to have lots of our catalysts, lots of random like Fed speakers and things that could be said. As we drive forward into tomorrow, not much really going on. So that's why I said Monday was slow in terms of catalysts. Friday is going to be slow in terms of catalysts. And looking forward to tomorrow, we have one Fed speaker right after the open, and then we have Michigan sentiment, which you guys know I love to trade if the possibility is there. So we'll be watching that for a possibility at 10 o'clock, and then one more Fed speaker at 1 o'clock. So comparatively, tomorrow's looking pretty relaxed in general. Good morning, Hatchet. Thanks for popping by. And Toby dropping the sup in the chat. Good morning, you guys. Hey, I had an idea this morning. So let me pop it up on screen. How about we do this? This is supposed to be my last stream of the week, but let's make a little goal. I'll have a little fun here, right? I'm in a good mood. I got some time tomorrow, and I have a feeling today and tomorrow are going to be fun days to trade the stock market. So I'll make a deal with you guys. If we hit 40 likes on the YouTube stream, I will do an extra stream tomorrow. So if we hit 40 likes on the YouTube stream, it's a little bit of a stretch, but typically we float around that 9 to 15, maybe sometimes 20 likes. So if we get 40 likes on the YouTube stream, I will do another stream for you guys tomorrow. So if you're watching either on X or Instagram, because I know I've got a good amount of followers or watching on other platforms, pop over to YouTube, hit the like button real quick, and you can pop back wherever you want to watch it. We will do another stream tomorrow. So 40 likes, we'll do another stream. I'll leave that up for the time being as a reminder. Good morning, Negum. What's going on, my friend? Thanks for popping by. All right, we got 7 minutes until the market is open. And like I said, today's going to be a really, really interesting day. And I want to go through a few names that I'm really, really liking right now. Tilray is one of these names. Just reported earnings, and the earnings were actually pretty solid. Again, weed name, hype stock, but like I talked about, I believe last week was it last week or this week, when I said how the idiots are taking over, right? How like dumber money might start to get some more flow. Tilray is one of these companies, these weed companies that, yes, they don't necessarily have, they are making money actually. Tilray, actually this earnings, they made money or broke even, whatever. But they're doing pretty good. And this stock, again, we used to be $300, beaten into the dirt, right? Now sitting at about a $2 valuation. Full transparency, I did open $2 calls for March yesterday, both in my small account that we have over exclusive trading and also my personal account. So currently those are going to open in the money, so looking pretty solid there on Tilray. But I would keep an eye on this name in general. If we can get a nice push over 215, 217, you could get a nice continuation here, even for another $1 on Tilray, believe it or not. People are short this name and really shouldn't be. So definitely keep an eye on Tilray if you like that weed exposure, right? So be mindful of that. Omar says you got mine. Thank you, Omar. Appreciate the support. Beastwood in the chat. What's up, my friend? And Negum dropping the like. Thank you guys. Don't forget 40 likes on the YouTube channel. We'll do another stream tomorrow. Toby giving us congratulations. Yeah, because we saw AMD got that news, and look at that. AMD got that OpenAI news, and it's pushing higher. I think AMD is actually going to continue pushing here, believe it or not. Just broke all-time highs on this monthly candle. I believe on the weekly, right? Yep, broke it on the weekly candle. Especially if we close out at the high, you're probably going to get a trend continuation here. If I was an AMD shareholder, I would not be taking profit yet. I know that sounds crazy, but if I was an AMD shareholder, if anything, I'd put a stop, like assuming I got in anywhere down here, right? I'd put a stop right beneath this gap on this candle, because that's a very logical place to put a stop, and you ride the wave up. You move a trailing stop, you just ride this wave up, because you're probably going to push here with a lot of the AI hype in general. AMD could continue to appreciate. Thank you guys for dropping the likes. Looks like we got about 7, 8 likes. This is updating very slowly, so I don't know. I'll check that in a little bit, but appreciate you guys dropping the support. for the program. Another name I want you guys to check out. Okay, we talked about how these nuclear names and a lot of these like pump story names are getting some a lot of love really in the near term here. And NNE, so nano nuclear, this is one of those hot names right now. It's loved by retail. Yesterday announced an offering. This is what's very interesting about NNE that's different than your typical offering that you see. So they did what's called a private placement. A private placement is when they're essentially diluting shareholders, right? They're still raising capital, but the capital they looked to raise was $400 million by offering new shares in the private placement. What is interesting about this that makes this different than regular dilution, which it's still dilution, don't get me wrong, but what makes it different than regular dilution is that it was oversubscribed. And what that means is the private placement, so when they went to these private shareholders, these private investors and went, hey, would you like to buy shares of our company? And they went, yes. And they said, wow, we have $400 million worth of shares we'd like to sell to you. And they go, we want $600 million. That to me is very bullish. Now, yes, that could dilute the stock even more short term, but that tells me the demand from private institutions or private investors on this name is extremely high to the point where they were looking for 50% more exposure from that offering than they were originally willing to give, which is a very, very bullish thing in my eye. So as a result, I personally entered a long right around the support area here yesterday as we tapped the AEMA. We closed on the AEMA, so I think actually I finished red on my position. Here, let me look back. I got in right around here. So in between these my two LOIs here of 47.43 and 48.05, breaking over 48.5, which we are currently sitting at in the pre-market here, could lead to a continuation here to the upside. Again, this is one of those momentum trades where it had a decent cool off here after a arguably pretty parabolic move on higher volume. Now, you did have a higher volume sell here, which is going to be typically a bearish thing, but selling off into the support, still holding that AEMA. I like this for an educated stab. And when I say educated, I'm saying don't go crazy with how much you're exposing to a name like this, but because of that one thing and that offering and how there was a higher demand for this name, you may want to consider at least looking at NNE for a near-term trade here. I mean, even if you got in right now, looking back to get to all-time highs here, that would net you, let's see if we got in right around here, back to all-time highs. I can't see because the thing's in the way, 20-something percent. So 25-ish percent. So good risk to reward here. Slap a stop on or be careful because it's a little whippy. I really like NNE here for a short-term momentum trade. Hatchet is trying to tell everyone to how to cheat the system. He's saying you can like both the portrait and the landscape versions. It's not cheating because you're driving the YouTube algo, which is the goal. Yes, thank you, Hatchet. So we are up to 8 likes right now. I don't know if that actually is true because there's 8 likes on the normal stream. So I don't know. I'll have to look into that after. Not sponsored by Polar, but we're going to be sponsored by Polar one day. That's the big goal of the channel. The running meme that I will one day be the only financial podcaster that's sponsored by a seltzer, regular seltzer, not a hard seltzer or anything like that. Now, there are other names I want to jump into, but the market is about to open here. So we're going to swing back to the stock market. We'll keep an eye on the open here, especially after yesterday's close, and see how things go. Today, what I am prophesizing with my crystal ball here might get a back test of this 672.99, but assuming things stay bullish and assuming any of these Fed speakers or any of these catalysts, right, plural catalysts, don't come through and wreck things, I think we'll slowly move up to around a 675 price target today on the SPY. And also, full transparency, I am long some swing calls on SPY expiring next, I believe it's the 17th, next Friday. Is that the 17th? I believe it is. Let me double check. Yeah, the 17th. So I'm rocking and rolling some of those still. All right, market is about to open here. Getting a little bit of a pump here on the opening candle, and the market is open. Alrighty, let's see what we get here. Q's opening up a little red here, as is IWM, while the SPY is looking a little green. So a little bit of a mixed bag here. Interesting. Volatility is very interesting yesterday. We saw, and I was mentioning this to our community over Exclusive Trading, how volatility has been moving lately. And I actually predicted that we saw volatility to move up as the market moved up as a whole in general, which is not typically what happens. Typically, when the market goes up, volatility goes down. That's not always the case. We saw periods of expansion yesterday on volatility, even though the market was rising, which is a very interesting thing to notice. So we'll see if that rhetoric continues. Let's actually check out what our 0 DTE IV is on the day. Currently opening up about 12%. Rolling 52-week IV right now is about 15%. We're now in the 20th percentile. So IV has considerably moved down the last few days. I believe last time I was live was at 40%. So that's actually a big drop in terms of IV, which implies that the market's not looking to be very volatile today in comparison to previous days. Q's getting a little bit of a push here. Don't get a little too alarmed here. We're on 1 minute candles, and it looks like a fat pump here, like a big pump on the market, but this is only 30 cents. So stay very level headed on this open. I wouldn't be too crazy here. Why is this all funky? There we go. IWM pretty volatile out the gate here, swinging about almost $1 here in the first minute of the open. I'm guessing Nvidia's pushing. Oh, Nvidia's actually just as volatile. Microsoft here. Why are my charts lagging? Microsoft trying to push out the gate here. Apple. Why are my bars so? Let's do this. There we go. Apple pretty flat on the open, down to pre-market lows in the consolidation range. Tesla here is not updating for some reason. There we go. Tesla dropped and back tested that 0.786 retracement, which we talked about on the daily, how important that is. So we'll see if this general area holds. If you were to take a stab on Tesla, as a long, I would consider it here for a day trade back to POC, which is going to be 439.30. So you got about $8 there. It's not a bad trade. Now, as I say this out loud, I contemplate it for myself, but I might miss the boat here. And I also really don't like playing Tesla like right at the open, because not only do their contracts IV get super juiced, because obviously you get a lot of volume at the open, you could pick the right direction and still be wrong, especially on the buy side of options. So let's watch and see. We'll come back. If we back test this 0.786 at around like 940, 945, let it cool down a bit, then I might consider a long on Tesla to push back to 439 on the day. Amazon is still north of that 221 on the daily chart. So that tells us that Amazon is trying to reverse here, bullish. If you're a shape drawer, you might be thinking this could be a bear flag here. So for those of you that like shapes, be mindful of that. You are underneath the 50 MA on the daily. You rejected and left a wick there from yesterday. So this isn't out of the woods. But again, as long as it's north of 221, if you could build a base here and rally, then you're more than likely going to stay bullish on Amazon. Meta here, fighting for its life above that 70802 area. We talked about how important that is on the program. Wicked it for 2 days in a row, so it's showing that some bulls are trying to defend that area. And now we've got our first little ray of hope here for Meta to try to rally out of this mess that it's in. Google just chopping along here at the open. Nothing too exciting, but it's looking a little potentially concerning. Now, if I'm a bull, I'm looking at this two-way, or both sides of the coin here, right? I'm looking at this as a potential inverse head and shoulder on the daily, where you got your first shoulder starting at 925, second one today, with that support of the 21 EMA, your head obviously being on October 1st. So maybe a little baby inverse head and shoulder kind of look here. If I'm a bear and we break below this 21 EMA and potentially, again, where the head is, which is the low of 283.61, which is about $5, $6 from here, then you could have some continued downside. So either way here, I would prefer a long here based on how this is sitting with a tighter stop to ride the rally to the upside. But I could see a case where this could break to the downside as well. Remember, as I'll continue to remind you, Google is the canary in the coal mine, right? As long as Google is bullish, your Mag 7 names more than likely will stay bullish. That's all you got to know about Google. Eddie dropping the yer in the chat. He's late today, but he still brought the yer. Don't forget, guys, if you're watching right now, if you drop a like on the program, if we get 40 likes on the stream, I will do another stream for you guys tomorrow. Same bat time, same bat channel. All right, back to the market. And not looking fun so far. Big little pump. Oxymoron. Jumbo shrimp. Big little pump here, and then immediately rejected back to open price. Not seeing too much here, so we'll actually look at our sectors, and then I want to highlight some individual stocks to you guys that you might want to consider, because I do think as the market slowly moves to the upside, that this is going to be, into the end of the year, a very stock picker oriented market, where the advantage will lay to those who actually pick quality stocks or names that at least have momentum into the end of the year. That's kind of where my mindset has been changed a little bit. So we'll talk about that in a little bit. But first, let's pop around to our sectors and see how things are going. Defensive sectors are all green today, which is interesting. We're seeing our utilities up 0.46, energy up pretty big at 0.74, and consumer staples even up at 0.2. Now, I want to have a little aside with you guys and talk about the interesting thing here with the defensive sector. And I kind of had like a little Jimmy Neutron brain blast this morning about it. And it seems silly, but it's obvious to me now that I've thought about it. And I'm like, wow, why didn't I notice this sooner? We've noticed that the XLP, let's look at the daily chart here, has been moving down more so than the XLE or the XLU. The XLU has been rallying. And the thought process that I came up with was that, and it makes a lot of sense here, energy, right, and even utility, these names could include some of those hype momentum trades. So even though the XLU and the XLE tend to be more defensive sectors, when we have, for example, like OKLO, right, or NNE that I just mentioned earlier, these nuclear energy companies, they could help fluff up, not necessarily utilities, but I'm just giving an example here, fluff up these ETFs where the other normal energy sector may be getting a little bit of a pullback. These names are actually carrying the weight of these sectors to make it seem less defensive and more risk on. Now, what supports that thesis here that I'm trying to theorize and explain is that the XLP has been on a continued decline now for the last few months, right? That insinuates to me that the market is moving risk on in general, especially as we see the XLK continue to the upside. We're moving risk on in general because we're getting out, or the market's getting out of these more risk off names, right? They're getting out of your Heinz, your Kraft Heinz, your whatever else, I can't think of, Smuckers, any of these like consumer staple companies that aren't going anywhere that make money, but they're getting out of those names right now and getting into these other names. And that thesis, again, is supported by how the XOK has been sitting. So I've changed my viewpoint a little bit here on looking at these as a cluster of your three defensive sectors, although they are traditionally, and I'm using really just XLP now as my barometer for defensive risk. So if the market is leaning more defensive or offensive, so risk on, risk off, right? If the market is leaning more bearish or leaning more defensive, the XLP should get more of a rally, while we see obviously the XLK go down, but putting less weight on the XLE and the XLU to support that narrative, because as you can see, the charts don't really align. You can see XLU has been rallying like XLK, and XLE has been kind of stair-stepping to the upside, while XLP, again, your consumer staples, have been slowly trotting down. So I've changed my viewpoint on that. I want to share that with you guys because I think it's important, and it makes a lot of logical sense when you think about it and really sit down with it, that I'm really just going to be using, at least between now and probably the end of the year, XLP as my, again, barometer for if the market is more risk on, risk off, and compare that to XLK, which is obviously like where a lot of growth is, where your tech is, to get an idea of how the market is leaning. So I figured I'd share that little update with you guys. That way you can feel a little bit more in the know when we're looking at these kind of companies. Because right now, for example, energy is rallying at almost 0.9% on the day, and meanwhile XLP is kind of farting along here at 0.12, which is not really much of a change. So that's interesting to see. Our tech is actually moving to the downside, which we kind of talked about in the pre-market, how NVIDIA was really holding up everything, and a lot of the Mag 7 names weren't looking like strong or weak necessarily, but they were just kind of like no momentum, I guess. So we'll see if that changes throughout the day. Not a big move here on the XLRE, so your real estate. Materials actually having a decent day, up 0.5%. Your industrials are pretty flat. Healthcare pretty flat. Financials doing great today, up 0.5%. Had a few rough goes of it here, as you can see yesterday and prior 2 days ago. The XLF is having a little bit of a rough go here, but if it can substantiate above this POC, the 5363 area, which is right around right now, you're more than likely going to get another leg here on XLF. Wrapping it up with consumer discretionary, moving to the downside. So again, this is mostly your Amazon and your Tesla, but obviously there's other names rolled in here. And then comm services also trending to the downside, down a little bit on the day. So another mixed bag kind of day, which is why I really want to hone in on saying this is a very stock picker oriented market as things sit right now. Going back to the market right now, before we get into some individual names, SPY really not doing too much of anything here. The Q's continuing to the downside and IWM pushing to the upside. Watch this 247.18 area. It's very important. We mentioned it earlier this week. So watch for a reaction through this level. As you can see, we're getting clean rejection off of this level for right now. And then obviously watch your all-time high here. In fact, I'll put a line there at 248.48 to see if we get any follow through off of this first initial break of 247.18. Going to volatility right now, and we are sub the 1637 LOI, but just by a penny or two. So this could mark a little bit of hesitation in general that volatility may look to expand on the day. Now, that's not necessarily a bearish or a bullish thing. Typically, right, it does lean the market more bearish. But that doesn't necessarily mean that, as we saw the case this week, as I mentioned earlier, that volatility can rise while the market rises. So we'll keep an eye on this to see if that changes at all. VVIX is pretty flat on the day, and interestingly enough, you're seeing a divergence here, and this is why I'm mentioning this, between your VIX and your UVXY. So as I tell you guys before, I like to use UVXY as kind of like a barometer of a little bit longer term trend on volatility, right? Because your normal VIX is your spot VIX. It's watching volatility right now in this moment, and UVXY encompasses, I believe it's 30 to 60 days of volatility, right? And also has options exposure. So the way I look at UVXY in comparison to VIX, and yes, VIX also has options, but it's a little different, is that UVXY kind of gives me a longer term outlook. And by longer term, I mean very near term, so a week or two. While the VIX gives me like today's volatility outlook. So I think it's very important to keep an eye on both, especially when they're diverged a good amount here. Now, if we look at the charts, they're pretty similar, but still the fact that the VIX is green on the day and UVXY is red gives you a kind of a mixed bag on how the market's feeling here near term. NVIDIA moving down, back tested the 191.05 LOI off by a penny. Pretty good if I don't say myself, and move back to the upside here. Not a big move though in general, basically holding the gap for now, so it's nice to see. Nothing here to see on Microsoft really. Apple actually getting a little bit of a little bloody here. Down 0.8% on the day thus far. As I told you guys how important these two ranges are, I am not going to long Apple at all until it breaks really 259.24. Because you basically have, as I explained, I believe on Monday, a double flat top setup here, essentially, if you want to get really in the weeds, which is something I've made up, unless someone else out there can prove to me they made it up first, where we had kind of like a flat top look here, and then another kind of flat top look up here. So we have these two levels that have formed from those two areas of resistance here, kind of like a double resistance, or a supply zone if you're a supply demand trader, where the market is now rejecting out of. So I would not be a bull on Amazon. That doesn't necessarily mean I'd like to short it, but I would rather be late to the party than show up to the wrong house, as I like to say. I'd rather get in on the trade after the move is confirmed than get on the trade too early and just lose money. So that's just my 2 cents on it. And as you're seeing right now, we're getting a clean rejection off of the 257.35, at least for right now. Tesla actually broke that 0.786 level, which is what I talked about and why I want to take the calls there. And that's why I waited, because it wasn't clean yet. So now we got a little bit more data here. We'll see how this plays out, but down 2%, not fantastic on the day. Amazon selling off as well. Still bullish, still above 221, but it's not out of the woods just yet. And Meta also moving to the downside. Remember that 708.02 area on Meta is what you want to keep an eye on for the day. For Google, watch the 21 EMA on the daily. It's 242.53, so about $1 here. Could get a little hairy here. The low of this candle, 240.74. So if you want to extend some grace to 240.74, that would form that kind of like head and shouldery, inverse head and shouldery kind of look here that I'm looking at from September 25th. So if we get that kind of move, I might open up calls actually, even though we'll be underneath our short-term EMAs, just to see with some tight risk if Google will get that kind of setup or not, or if it will fail to the downside. And at that point, if you take calls at 240.74, you're really only risking about $2 downside there. So obviously, depending on what time frame you pick on your calls, you're probably not risking a lot of loss in delta. In my opinion. Well, $2 loss in delta, but nothing crazy. All right, we're back in the range of 672.99 to 672.68 on SPY right now. So we're seeing a little bit of blood come through as the Qs also sell off. And IWM is also selling off for the most part, where it just broke the 1637 LOI. So if we break 1653, that's going to tell you to be more than likely risk off on the day. I know a lot of you don't like to hear that, but it means you want to take the day very slow in general, or at least lower your size on some trades, because the market's going to be a little bit more volatile than it really should be in this kind of environment. Guys, I haven't plugged it yet, but if you could do me a favor, wherever you're watching, whether it's on YouTube, Instagram, X, Twitter, interact with the stream, drop a like or follow me. If you haven't already, I greatly appreciate your support. And don't forget, pop over to the YouTube channel. If you hit a like on the stream, we get to 40 likes. I'll do another stream for you guys tomorrow. And if you haven't already, drop a subscription. If you haven't subscribed, once we get to 500 subscribers, this will be an everyday show. So if you like the show, you like the content, you like having some entertainment while you're watching some red and green bars, maybe make a little money here and there and learn something along the way, pop over to the YouTube channel and hit the subscribe button. I thank you in advance for your support. All right, let's look at some individual names. Let's see if there is some opportunity buzzing around the market. Actually, I want to check one thing before we go into that. So let me just check something here. Not too bad. Good. Okay, so I wanted to talk to you guys about Path. So we already spoke about Path on this program, but I wanted to bring it up again just to highlight how I said that this name could make a PLTR-esque move. And right now, in full transparency, I'm long this name all the way down here around like 13 bucks. So big difference from my entry than what could be your entry if you're not long on Path here. But what I'm looking for near term here is a tap of this 1808 for the gap fill. So I'm mentioning this because obviously some of you may like to trade options or something like that. But we're getting pretty gappy here and getting a little bit of explosive to the upside here. It has a lot of news, obviously some AI exposure on this name. What you want to look out for here, though, is the weekly 200 MA, which we're tapping right now, essentially. That number today is 1709. That's going to act as a decent resistance on Path in general, and I'm anticipating it to fail. So I'm actually anticipating it to go up to 1808 and give it back. Maybe go down to 1593 before getting a continuation here. So depending on your strategy, whether you're long equity or long options, that doesn't necessarily mean it's bad, but going a little risk off here if you're already long may be a smart idea. Now, with that being said, when we zoom out a little further, we look at the monthly chart here. I really like the opportunity that Path has built here. You had a nice little base that we're starting to break here, going all the way back to was like June of 2024. Basically building a decent range here up to 1593. And for those of you that watched the grab video, or you were here when we talked about grab, breaking those localized highs, especially on the monthly, tends to lead for an inflow of volume, which we're seeing right now on this monthly candle, already pulling in 217 million shares, and we're 9 days into the month. For comparison, the last month brought in 375, and that's also on higher volume. And the prior month, looking at August, 209. So we've already engulfed August's volume with 9 days into October. That is massive. You're also breaking the monthly SAR, which you guys know I think is a very decent bull trigger to use. So I'm very interested in this name as a long-term proposition. So once you pass over this 1808, you're going to more than likely hit your head around here, around 22, 27, and then again around here like this 26 to $25 area. However, once you're through that, and as you can see, I haven't charted up here yet because I don't like to get too ahead of myself, but once you're through that, it's kind of clear skies. And how this company is positioned right now and where they're positioned, and also with what we're seeing in terms of getting a lot of hype around a lot of these AI names, this is a $9 billion market cap company. We've seen companies pump that are smaller, right, and move more dramatically. But even if you're looking at like an $80 price target and you're assuming it's $20 a share, this would roughly be about $10 billion market cap, or $11 billion, but we'll keep number simple at $10 billion. It's not insane to see this company as a $40 billion market cap company in this environment. Those are keywords, in this environment. It is not insane to see that. What you want to keep in mind, so this is just a general rule of thumb when you're looking at trading any of these momentum names. The larger the market cap, the lower risk you take. What does that mean? I'll tell you. So if the market cap is much bigger, it takes more shares to move the stock in theory, right? If the market cap is much smaller, it takes fewer shares to move the stock, meaning for every dollar spent, more than likely you're going to move the stock a little bit more erratically. So as a momentum name shifts towards a larger market cap over and over, and you have a very low entry, you assume less risk as time goes on because the company is even bigger than when you entered. So that is something to keep in your mind if you are trading some of these momentum names, that as it continues to go up in your favor, obviously a news catalyst can come out and cut the legs out underneath, obviously. But in general, especially in terms of intraday price action, as the company gets larger, it takes more dollars, right, to move that company. So as it takes more dollars to move that company, with the share price being higher and the market cap being larger, you're going to get smaller gains theoretically. But that also means losses would be harder to substantiate, or at least rapid losses would be harder to substantiate if you're looking at momentum names and holding them more for the long term. So I wanted to have that little bit of dialogue there as it pertains to Path specifically, because I do like the trajectory it's on. Again, I do anticipate short term for it to fill the gap here at 1808 and reject here near term, just because of how the daily and the weekly are going, kind of cool off and consolidate. As long as it's north of 1593, I think this has legs to continue to the upside into the end of the year, at least north of $25. That is Path for you guys. So there's still an opportunity here, even if you're late on the name. I, again, would personally wait for some level of pullback here at this 1593-ish area. But knowing that, you still have a good opportunity to at least get $10 a share, in my opinion, even from that entry. So that's my take on Path. Let's check out Tilray, looking pretty good right now, over 204. Watch that 215 area like we talked about at the beginning of the program. NNE is around my entry from yesterday. I did a short little video on Better. I'm debating if I want to do an update. Yeah, let's open it up a little bit. You guys have any questions or any stocks you want to look at before I go into a bunch of other names? Let me open it up to you guys. Oh, look, my Quad U's pushing up, breaking this high. So let's talk about Quad U's here for a second. Here, I'll take this off the screen just for a minute, and then I'll put it back up. That way you guys don't have to stare at the, like the stream, please. The little promo there. We only have 9 likes. 9 likes? 75 viewers and 9 likes? Damn. Come on, guys. I know it's a Thursday, but come on. Anyway, so this is UUU. So this is another one of these momentum names right now. Now, full transparency, I got in around 1770-ish, basically looking for this break here of 1890. So what you're looking at here in general is a point of rejection here now 4 times. 1, 2, 3, 4. The last 4 days, or the last 2 days, I'm sorry, reaffirmed this level as a level of resistance, 1890. However, above this, you could see the bulls start to push up to 2313, at least near term. Now, if we zoom out on the weekly and on the monthly, this has been rocking and rolling. If you got in at 320, God bless you, are sitting on a pile of cash. But you've 1, 2, 3, 4, 5, 6, 7 green bars in a row, and volume is climbing. People are getting more and more and more bullish on this company, and there probably is some squeeze potential here because of what it was trading. So people were short, obviously, but you're seeing more volume come into this name. And as that trend, or if that trend continues, you should see a continued push on this name. I know it seems crazy, and I'm not one that typically chases or trades these names that are pushing so hard and so aggressively. However, considering the environment, I don't hate Quad U's here, for a decent entry, again, with a managed stop. So I'm actually risking a little wider stop than I typically do, down here to around 1460, which is my next LOI down here. I believe I have a few pennies lower than that. But with a 17-something entry, we're looking pretty good here to push and continue to push. So why I took that risk there, and why I considered that risk in general, is because it offers me good risk to reward on lighter size. So if you're trading these kind of momentum names, especially in this environment, you want to consider lighter size on your trades because you're going to capture more volatility. So when there's more volatility, of course you can make more money. Of course the stock could explode to the upside and you're going to go, dang, I wish I bought more. But what you won't do if it dies and goes to the downside and went, dang, I wish I bought more, because you would have lost more money. So if you are trading these names that are very, very volatile, you can enjoy that on a lower capital exposure that still allows you to make a lot of money. Let me show you guys the risk to return ratio here, risk to reward ratio. So on lighter size, this is actually a wide stop loss. I'm risking a 19% drawdown, which is big, right? That's a very, very big stop loss. But understanding how volatile this stock is, I need to allow there to be a wide stop loss or a wider risk, because right now I'm risking basically a 1.6 to 1 risk to reward here, where if we hit my first price target, again, this is only price target 1, that I'm going to get a 31% gain. Or if it goes down or dies, right, I'm going to have a 19% loss. So considering how big that loss is on equity, I need to go lower size because if it does crack and it does go to my first price target, guess what? I can move my stops up. And now the risk to return ratio, I'm making profit no matter what, but that works more in my favor, obviously. In fact, in my case, I can move my stop up to 1890 because that old resistance point is now going to become a point of support to rally to the upside. And now no matter what happens, again, I'm long from 1770. If it just dies out of the blue one day, then I still leave with some money. And if it continues to rally to the upside, I can just move my stops up and enjoy the momentum to the upside. So that's what I have to say about UUU. I think this is a solid name to ride on momentum. I make that abundantly clear. Ride on momentum. This is a $4.6 billion company, so it will move very aggressively with not a lot of money, honestly. So it's not a micro cap by any means, and it has appreciated quite a bit, but this is one of those companies I think people are going to be consistently trying to short and just get railed over and over again. And as you see moves like this, where you top out somewhere, you cool off, as long as you're holding these short-term EMAs, this is really all you need as a momentum trader. I use the 8, the 13, and the 21 EMA. As long as you're riding that wave to the upside, you're more than likely going to continue making money on UUU. Just be very smart with your stop loss and move that stop loss along to the upside as you continue to make money. What do you guys think about UUU? Quad U's. Moving up as I talked about it. Let me see. Just broke high a day. Has the Atomcash angle effect. Don't arrest me, SEC. I can't pump a $4.6 billion company. I'm not that cool. Path also had the Atomcash angle effect. Either that or one of you 70 to 100 people that watch the show is a whale and you're just buying billions of dollars of stocks I mentioned. Which, God bless if you are. Ooh, NNE. Here we go. Talked about this pre-market. Getting a little bit of a move here. Little bit of a move. Broke over my alert here, which didn't go off for some reason at 48.43. So watch for some continued upside here on NNE. Blue. NNE. There we go. I hate all these names. UUUU. NNE. It's like, damn. Make it easier to say. Tom in the chat drops SILJ. I don't know this one, but we'll take a peek for you, brother. SIL. Silly J? It's an ETF. Tom, just confirm that with me, brother. Prime Junior Silver. So I'm guessing this is a silver ETF. Silver miners. Okay. Yeah, we can talk about this. Just double check and confirm with me that's what you wanted to. This is the stock because I know not everyone trades precious metals. Okay, it is. So first things first, this is not a, I'm sorry, you're correct. It is a silver miner ETF. So if you are trading precious metals, I would always heavily suggest you consider trading miners over trading just spot gold or spot silver ETFs. Why? You tend to get more volatility, and since these are typically slower moving instruments like gold and silver in general, damn, Tilray's up at 220. Let's go. Sorry. Since these are slower moving instruments, you want miners because the silver miners and the gold miners tend to carry a little bit more volatility because it kind of projects the future projection of gold and silver. So regardless if you're long or short, you want to consider gold miners or silver miners versus just ETFs that track spot gold or ETFs that track spot silver. Just a quick little side note in general, little educational piece. Now, for this particular name, actually we'll pop that back up. For this particular name, it depends how you feel about gold and silver, right? And this is specifically for silver, and I don't know what the makeup of this ETF is. So let me just see if I can get more information here. Silver companies. Fund invests at least 80% of its total assets in component securities and indexes and ADRs and GDRs based on the component securities in the index. Okay, so it's just investing at least 80% of its funds in small cap companies engaged in silver. So this is, if you are going to take a risk on a silver mining ETF, this is your highest risk you could take on silver theoretically, because not only are you investing in silver miners, you're investing in small cap silver miners, right? So this is your riskiest theory of silver exposure. The one thing you want to be mindful of, the total assets under management, so your AUM, is only 640 million. That's not a lot. It's not awful by any means. Like, it's not concerning, but it's not a lot. So you could get a little jumpy price action. Just food for thought. So this is obviously moving up with the price of silver. Honestly, I'm not a silver bug or a gold bug. What I will tell you, and this, you take this with whatever grain of salt you want. Spot gold and spot silver, I think, are starting to be at a capitulation point where they should come down. I think both spot gold and spot silver are overvalued at its current point. I would not be long silver or gold right now. In fact, I actually just watched a video yesterday from a pawn shop owner. Now, obviously, this is very subjective information, but I saw a video about a pawn shop owner, and someone went in and asked him how much gold, like he went in to sell a gold bar. And he said, how much gold do you guys sell and buy? And he said, well, for every one person who comes in to buy, we've got 7 people or 8 people coming in to sell gold right now. And he said for silver, it was like 9 to 1 or 10 to 1. So there are more people selling, at least, again, this is just a subjective point of view, more people selling gold and silver in general. So what does that mean? Well, it means that people think that the price in gold and silver could be overvalued, because that's what people do. They sell when things are pricey, right? They want to make as much money as possible. If they thought gold and silver would continue to appreciate, they would hold on to it, theoretically, or they would buy more, right? So that's, again, subjective information, and I'm not a commodities trader by any means, so take what I say with a grain of salt. But from my point of view and how I've been looking at how silver and gold have been trading, and I actually got burnt on a gold short trade a few months ago when I thought it couldn't go higher, and it did. I personally wouldn't be long gold or silver. And if I wanted to take a short stab on gold or silver, I would do it through a silver miner or a gold miner ETF, such as this one. If I wanted to take on more risk, I would assume a position on a name like this that has exposure to specifically small cap silver miners, because that's going to be the riskiest, I should say, the most risk exposed portion of the market, specifically. So hope that helped you, Tom. I don't know if you're looking to be long or short, but I would err towards the side of caution and err more short than I would long on silver and gold right now. Again, not a commodities trader. I don't follow these things like day by day. It's just I follow general trends, and that's kind of what I'm seeing right now, at least in my opinion. So let me know if you have any follow-ups there, Tom. Touching on Tilray again, up at 225. This thing is mushing right now to the upside. If you're in our Seed to Tree program, our small account challenge over at Exclusive Trading, I opened up those $2 calls for March at around $50. We are now up at 76. Well, it's a widespread 74 to 79 bid-ask spread on these contracts. So up about 50%, a little bit more on those $2 calls. On my personal account, I will probably hold those. And on a small account, I'll probably realize those at some point, either today or tomorrow. But nice little trade there on Tilray. Tom says, my brother has been focusing on silver and gold, so I'm looking into it. Is he bullish or bearish? That would be the first question I would ask. You guys want an update on Better, or do you not care? I got some hate because I didn't respect the person who brought it to the forefront of the market or something. I don't know. People are weird online. A lot of you that watch the program every day, not weird, but a lot of people are very weird when you talk about their cult stocks online. And this is also another huge driving factor. We'll get back to the market here in just a second. It's another huge driving factor on why I think the dumb money's coming in. When I speak about a certain stock, and I know a lot of you that watch the program, you don't really get more emotional. You at least are willing to hear out my thoughts. Even if you disagree with my thoughts, it's at least something to take into consideration. You understand it. It's not me saying you're wrong and I'm right. It's more or less like, this is what I think and where the risk could be, right? When I share those thoughts, especially on cult stocks or story stocks, and people write very emotional replies just insulting my character for no reason, that tells me that I'm exactly on the money with my assumptions on trading momentum stocks, because we're getting dumb, emotional people, new retail investors heading into the market. I hope they stick around, and I hope they learn, because I think really everyone, if they want to be a trader, they can be. But if you're one of these people who gets very emotional, especially if you're watching this program and say something you don't like about a stock you like and it's very rational, you might want to take a step back, or you're either you might want to either A, take a step back, or B, you're overexposed. You may have too much money in a stock. If I say something about a certain stock or a certain name that you don't like, that really upsets you, you might have a little bit too much exposure. So just something to consider. Ooh, Tom says he's bullish. Interesting. Okay. Interesting. Again, I'm not a commodities expert. I'm not a precious metals expert. So it's not an industry I typically trade or follow. So I could be off the mark on that. But just from experience and what I've known and what I'm seeing, I would lean more bearish on metals in general. Or all precious metals, really. Touch up or little follow up here on Crocs. So I entered more shares on Crocs yesterday or 2 days ago. So I scooped up more shares north of my original entry around the 77-ish area. We stayed north of the 200 MA. We rejected the 50 MA. I'm sorry, we stayed north of the POC, rejected the 50 MA. And it's condensing down here, right? You're getting lower highs, which isn't necessarily good, but you are getting higher lows. So for those of you that like shapes, we're forming some level of a pennant here. This is one of those names that's more fundamental in a sense. I know it sounds crazy to call Crocs a fundamental company, but it is more of a fundamental play, I should say, because their financials are really, really solid. So I'm personally looking at their next earnings to be a big catalyst to drive this to the upside. I really, really like Crocs here. I think it's going to have the Sydney Sweeney effect, as I called it, and have a continued upside here. I think there's a lot you're leaving on the table with a company like Crocs. I don't think they're going anywhere. They have a good business. And honestly, they're only a $4.3 billion company. So if there's another company out there like a Nike, and just an example, that wanted to buy out Crocs, they're an established brand, and they have established brands like the Hey Do brand and Crocs in general. They make money. They have good financials. This could be a buyout opportunity where at its current evaluation. It's a $4.36 billion company. Even if you were to double that and someone buys out Crocs at $10 billion, is that too crazy? Is that really a crazy, crazy thought? Maybe to you and me because it's a stupid rubber shoe. But in terms of evaluation, I mean, yes, that is 100 or it's 2 times its current evaluation. So I would put this stock at $160 a share, but just from a logical point of view, is a $10 billion valuation for a big brand with strong financials and good brand recognition insane? I would challenge you to say it's not, but something to think about. Kelpad over on Kick, dropping the U, man. What's up, brother? Thanks for popping by on Kick. Volatility right now breaking to the upside. We broke above that 1653, topped out at 1682, and just kind of grinding to the downside here. The market overall as a whole trending lower, but looking like we're trying to get some level of reversal here. Q's kind of leaving you with a little bit of a triple bottom, and IWM had a little bit of a sharp decline, trying to bounce back pretty quick. NVIDIA rallying pretty solid, and I'm telling you, NVIDIA's putting the market on its back today, up 2%, almost 3%. On the day after getting that $300, I believe it was a $300 price target. Yeah, here we go. $300 price target on NVIDIA from an analyst, seeing at least 50% upside on this $4.72 trillion company. Insane. Not saying it can't get there, but that's just a crazy thought to think about, that you're going to put a price target out there right now for 300 is nutty. Anyway. Microsoft right now not doing too much. Apple continuing to grind to the downside. Again, would not long Apple until we break over that key LOI at 259.24. Looking at Tesla. Tesla's interesting. You're going to want to keep an eye on Tesla because if it holds this 0.786 area, you could actually, I might put my money where my mouth is right now. I'm debating on grabbing along right now. It's not clean yet. You are making higher lows, which I like to see. You're also making lower highs. It's Thursday. Let's do it. What do you guys think? 435s. All right, I'm looking at the 435s for Tesla. Let's grab a few. All right, picking up a few. All right, I'm long the 435s on Tesla with a 4.02 average. 435 calls at 4.02 average. Kelpad, thank you for the compliment. Kelpad says over on Kick, how you doing? I'm doing good, brother or sister. Don't know if you're brother or sister, but I'm doing good. Thank you for asking and saying you really love my vibe. Well, thank you. Hopefully you pop around a little bit more. We do a show here at 9:15. And if you don't know, we're also on YouTube. So make sure you check that out as well. Let's follow Tesla right now. I'm going to add this to our watch list here. Pop that up on there. And we'll drag Tesla up so you guys can see it next to the contract right at the top. Already up at 425 on these calls. Got in with a 402 average on my entry. Breaking the 50 MA here. So it's looking pretty solid. Look for breaking this localized high. So you're looking at over 431.24 to act as your trigger here. Getting that. Watch this high, this candle here, 432.30. And then obviously breaking over the 200 MA is what we're looking at. Over that, we're rallying again. I'm looking for 439 on the day. Big call, I know. But if we hold it here and get out of dodge here, so we're making higher lows, if the bulls hold it up, the risk to reward here is pretty solid. Hetty saying the vibes are immaculate. Hell yeah, man. We'd like to bring some good vibes, some positive energy here to you all on the Atomcash angle. No snoring here, no boringness, no dead air. There's never dead air. I'm a one-man show. We're going to keep it that way, at least for now. We keep the energy up. We keep you all entertained. I decided what I'm going to lean towards, and some of you guys can tell me if you like this idea. I'm going to lean towards being the Bill Nye of finance. You guys ever watch Bill Nye growing up? I mean, I'm 32 years old, so I might be dating myself here a little bit. But Bill Nye, the science guy, did a fantastic job of explaining complex ideas with science, but he actually made it entertaining and interesting. He had just the energy, the feel, right? He made it that you actually watched a program about science that you otherwise may not care about or may not understand because he kind of just gave you a good feeling about watching it. And that's kind of what I want to do. I want to be the Bill Nye, the science guy of finance. I want to keep you guys entertained and educated all at the same time. And I think that's possible while we're looking at red and green lines, although some people would disagree very strongly, but I think it's definitely possible. All right, we're right now fluffing around this 0.786 retracement on Tesla here. Big wall here. I'm not sure, can you see that on my screen? I got the text in front of it, but you got a big, oh, that just went away. Never mind. There's a big wall on the level 2 that has now disappeared. Now, I don't really use the level 2 unless I'm typically trading momentum, because it kind of can give you a false reading on where people are. And for those of you that don't know, level 2 basically gives you insight on the book. So I like to keep my level 2 at 50. That gives me an idea of where the next 50 bid and the 50 ask are on the book. And then when you see big lines like this, there's typically like a big order or a big sell order placed, buy order or sell order placed. And that can give you some insight to support and resistance levels. Now, I don't like to focus on that because you can have what's called a fake wall appear. Fake support, fake wall, right? Where you see a big wall appear, like, oh, someone's looking to sell 100,000 shares, and it can be just psychological because they can just remove that limit order before it even triggers. So I wouldn't read too deep into the level 2, but the level 2 can give you some extra insight on the market, especially when you're trading strong momentum. That is when I love using the order book and use level 2 very strongly, is when you're trading a lot, like one of these momentum names that we talked about, Path and NNE and UUU. Those tend to be valid walls a lot of the time when you're pushing up really strong intraday. We're going to pop back to Tesla here in a minute. I got these contracts up, so we'll keep an eye on it. We're getting really, maybe I want to watch it. We're getting really, really tight here. Higher lows, still lower highs. So again, if you're a pennant drawer, you like shapes. That's kind of what we got forming out here on Tesla. Sitting just shy of my entry at 402, currently trading at 390 on the 430 calls expiring for tomorrow. Let's see if anything else has continued to make a move. Path hit a high and moved down just a little bit. AMD, not really a big move here. I mean, we talked about this at pre-market, how if you're riding shares, I would continue to ride the shares. Tilray, wicked. I was off by a penny. My 231 LOI wicked it off by a penny at 232 and rejected. NNE up about 3%. That's all I really think of. Oh, and UUU we talked about. Hovering above the POC on the day thus far. Not really anything too alluring. Open at about 850 for those of you trading open. So it's looking like it's going to be kind of a dull day, dare I say. Let me just double check when we get our next news catalyst coming down the pike. 11 o'clock, Trump is hosting a cabinet meeting. So could see, I mean, obviously if he comes in front of a camera and says something, there could be an effect there. Only 10 likes on YouTube. 10 likes, guys. 10. And we've got over 100 viewers watching the program right now across all social media platforms. Do me a favor, wherever you are, interact with the stream. That's always supported. But especially if you're on YouTube right now, drop a like on the YouTube stream. If we hit 40 likes, I will do another stream tomorrow. So if you enjoy the content, you want more content, open up your app, whether you're working or whatever, hit the like button real quick. It helps support me, and I appreciate your support on the channel as always. Getting really tight here on Tesla. That 50 MA is coming down pretty good, and those short-term EMAs are starting to curl up. If this breaks to the upside, we should have a really solid move with some follow-through here. Your 5-minute MACD is curling up as well. The big level to watch essentially is going to be this pre-market high, 433.31. That's going to put you over on everything. So is that the high day essentially? No, it's not. 433.31. I'll put a line. 433.31. That is going to be a decent trigger point. We'll make a nice big red line for you all to see. Ta-da! All right, getting a little push here on Tesla, up at 420 a contract for those contracts thus far. Again, we're going to watch right around here in the 200 MA. So now this is intersecting. So we have kind of a good confluence here for potential rejection off of this first move here. So I'm looking for a pop and then a back test essentially. So if I'm going to trim some out here, I'm going to trim some out here very soon on the pop. Looking for the high of this candle essentially. That's 432.30. So another 70 cents or so. That's where I'm going to trim some out. And I'm telling you this because YouTube's on a delay. So as you're watching, you have an idea so you don't miss anything where I'm looking to trim some out. Currently, those contracts are up about 10%. So we're going to look and see if we can hopefully get about 15% on the first entry here, on the first trim. 15, 20% would be rad. We'll see what we get. Another 50 cents or so from this point. Good volume on this push. So you're seeing a little bit of a bump in volume. It's a little shaky though. All right, rejecting a little early. I don't love that as a bull. We didn't get exactly where I wanted. Now, to be fair, we went to this wick here from 958. Basically topped out there before back testing. So there's an argument to be made there from a technical basis. We get a little bit of a rejection there. So now we're back testing. Hopefully we leave a wick here and then get that push I was talking about short term. Again, up to this price target right around this 432.32. That would align really solid. That'd be the first place I want to take a trim. We're north of the 50 MA, all short-term EMAs and the POC and the 0.786 retracement. So a lot of things working in favor of the bulls from a technical perspective here. Getting good volume, not great, but good volume here so far for 10:17 a.m. So we'll see if leave a nice wick behind. That would be ideal for getting a little bit of a continuation to the upside here. Now you notice here on the 3-minute, we actually wicked the 50 MA, so that's interesting. Now picking up some volatility here. So we'll hopefully see a continuation here. While we're waiting, I'm going to pop over to the SPY. And SPY right now actually broke through my little support range here of 672.68 and 672.99 and back down to 671.63. Now this area wait, is it this area? Hold on, I might misspeak. No, it's down here. This is the area on the week that's been just a very sticky area between 669.37 and 670.57. So if we break lower here, there's a good chance we actually could get into this range once again. I believe last time I was live on Tuesday, I said we basically closed there, and we did. I think I was off by a few pennies. So it's looking like we might get back in this range if the bears, or I should say if the bulls don't defend literally right here. So we'll keep a tight eye on that. All right, come on, Tesla. Look to break over this high. Give me a little bit of follow through. There we go. All right, going to take a trim momentarily. Here's your heads up. All right, trimming some out here. All right, I took my first trim for a 13% gain, tapping the 200 MA. So that's roughly, what's that, $50-something a contract? It's pretty solid. So now if we break this is the big level to watch, 433.31. So if we pop it real quick, so we pop the 200 MA here real quick, I'm going to definitely want to trim again. Contracts are appreciating pretty solid. They're at 470 right now. Key, I mean, you're noticing here in real time a little bit. I'm actually going to trim a few more out here and capture a little bit of this IV potentially. That's 18%. Now, like I said, I was anticipating a rejection of this general area here to come back and back test the 8 EMA before getting a rally. But because we already had that little bit of a back test here at the 1018 candle, it's very possible we just move right back up to 433.31. This is where I'm taking my third trim, and we break high a day. I'll more than likely take my fourth trim. So just so you guys understand how I trade, I typically trade in 4 swatches. I don't know, groups. Once I get to my fourth trim, I'm more than likely on runners. I make the lion's share of my money in my first like 1 or 2 trims. That's just how I trade. You may trade differently. That's how I like to trade. But giving you guys the levels to watch here. Again, breaking over this. We're targeting 433.31 and then high a day. This is going to be a big level to break. Nice push here on Tesla. Good volume on the last candle. We'll see if we get follow through here. These contracts are at 480, 45. So we're rocking a nice, what's that, 20% gain now? A little bit over 20%. Not too shabby. Yeah, you're seeing a nice pop in volume over the 200 MA. Again, I don't anticipate this to break right away. I'm not going to be mad if it does. I'll be pretty happy if it does. We'll keep an eye on that. Yeah, some weakness on the overall market right now. SPY breaking lower. It's not going to help the rhetoric here for a bull move on Tesla just because the wind's blowing in our face. I'm trying to be a bull and the market's selling to the downside right now. Q's broke the low a day. What I'm going to do is I'm going to put a stop loss on at break even just to be safe. Because the overall trend of the market is leaning more bearish right now. And like I like to tell you guys, when I'm in a day trade, I want to know if the wind's blowing in my face or at my back, right? So right now, the wind is blowing in my face. I'm trying to be long the market while the market has been moving lower and trending lower as a whole, right? So I want to be realistic that sentiment on the overall market may be kind of poor at the moment to be a bull, where this technically could still work out and may still work out because of the overall sentiment of the market. I may want to reduce risk in that sense of at least putting a stop loss on where I'm not losing money in this scenario, where I'm not giving up on the trade. I still think the trade is a very valid trade. But for whatever reason, if the market sees more weakness, more downside, which I said could be likely to get, again, in this range, at least go in this range today, then I want to at least protect myself in the event that Tesla sees a decent red candle here selling off with the overall market. Eddie said, like I said, vibes, immaculate. Great trade. Thank you, my friend. Thank you. It's not over yet. Might still really work out. Like I said, from a technical basis, this is a solid trade, and it has a lot of potential. But as I like to say, as you guys know on this program, potential means nothing without follow-through. If we have the follow-through, I'm all about it. We also have the red SAR here. You guys know how much I love my SAR breaks. Red SAR break on the 5-minute. We're testing it right now. We're right at this level. Here we go. All right, trimming out for my next trim. 28%. Let's go, baby. I got an air horn. That's 28% on Tesla. Literally, wait, did we get that to the penny? Tell me we got that to the penny. Oh, it was a penny off. Damn. High of this candle where we left a wick was 433.30. You can see right up here. 433.30. The level I put was 433.31. Damn. But pretty solid. So we got one more trim before I go to runners. And again, I'm targeting a high a day. So 434.34. And again, realistically, I'd like to see the runners go all the way to 439 if we see some bullishness come into the market. Now, what I won't do is go to runners if this pops and we have strong volatility, like strong volume. I want to wait for the first sign of weakness before I go to runners because I could leave some profit on the table. So if you see it pop and we see some like big bars moving very quickly, I don't necessarily want to go to runners right away like that because two things. I want to capture that IV, which is very important because that's free money. Anytime you get a pop in IV, that's free money, especially when you're long options. But I don't want to sell myself short. So if I see a strong move up, especially if we break the high of the day here, and we see like Marubozu candles, what I like, not what I like to call them, it's what they're called, candles with no wicks, and we're just going and going and going. I want to wait for the first sign of potential weakness before then going to runners. That is probably the best not financial advice I could say whenever you're in a trade and you're looking for the, as I like to say, the bigger fish, the bigger part of the trade. Hetty said, it's over for me. My TOS glitched and I sold all contracts by accident. Still took 50%. Hey, man, 15% is 15% more than you had when you started the day, and there's nothing wrong with that. There is nothing wrong with that, my friend. As you can see, this red line acting like a decent resistance. Very clean resistance here. So we'll see if we actually get a break here momentarily. Market had a little bit of a dumping, trying to get a little bit of a rubber band snapback. The Qs actually had a decent little sweep and push. So we'll see. It's got to get over this 50 MA for the bulls to have any sort of momentum driving here. IWM's trying to put out a higher low. Trying, not there, but trying to. We'll see if that comes to fruition. Keep in mind, our volatility is high. VIX right now is at 1679. We did break that 1653 level that I highlighted to you guys at the beginning of the show, and how important it is to be, really ideally, south of this level, because this, anytime we're north of this level, at least right now, it's going to spell higher periods of volatility for the market, so maybe make it a little bit more difficult for you to trade, so you want to keep that in the back of your head. NVIDIA basically holding the highs, not bad. Microsoft, not really much there. Apple is pretty weak today. If Apple can find its footing, then the market might turn around. Because even though Amazon's also kind of weak, Meta's actually not being the dog today. It got a little scary there for a second, but it's actually not being the dog. Actually, Google. Remember we talked about Google? I'm going to set an alert. 240.74. Set an alert for 240.74. I want to edit that. Enhance. Zoom in. 240. Oh, come on. 240. Click. Edit. I said 240.74, so I like to set my alerts a few pennies higher, just so it gives me time to open it up, right? So if I'm watching 240.74, maybe I set 240.80, which is what I just set, which we might just tap right now. So just now that we're zoomed in and we're enhanced here, I'm looking for, again, this kind of inverse head and shouldery kind of look here, where you have the lows of this candle on 925. We have the head down here from 930, really 10-1, but still 930 and 10-1. And this could be the start of the second shoulder here. Now, this is a pretty deep red bar right now. You're down 1.5%. So it's a little risky. But with some further out contracts, not necessarily looking for a day trade here. I'm looking for more of like a short-term swing. Could be a decent opportunity. Keyword is could be. And to be clear, this is Google with an L, not Google with no L. It's not the Goog. What's the low on this candle? The low, so the head is 238.61. And the other little fake out here, 239.25. Interesting. Clear bear momentum to the downside though, so you don't necessarily want to just take a random stab. I'd want to wait for a period of at least some sort of base or some sort of early sign of a reversal to consider those calls. How's my Tesla doing? Clean rejection off of that key level. Now backtesting the 200 MA. Those contracts are now at 475. Still up a good, decent amount here. See if the bulls can get a little bit of a rally and a break off of the 200 MA support here. Again, we broke the 5-minute SAR. It's not out of the woods by any means. Like, this is the level it needs to break for it to be like pretty cleanly bullish. Is at 433.31. That's why that stop is on. If you're in a smaller account, now would be a good time to tighten up the stop, in my opinion, to probably around like 440. Good risk, and that way you're at least netting 10% on the exit if you do get stopped out. MACD's currently down here a little bit, but bulls are maintaining momentum as I use my RSI as a momentum indicator. Bulls are holding good momentum, so this could be argued as a cool-off. Again, it is a back test to the 200 MA before going for that break or a bump and run kind of look. Let's go back to Google. Interesting. I like the opportunity on Google. I don't want to rush it, like I said, but this is one I'm going to keep on watch for basically the whole day. Because this could be a decent swing opportunity. Make that abundantly clear. Could be a day trade opportunity too. You might get paid right away, but I'd have a swing outlook, meaning I'm buying enough time to buffer for said swing to work out. Alrighty. Tilray just moving, still at $2.22 a share. What a beaut. What a beaut. Ooh. Alright, I might have to do an update on Better. And then I gotta upload it, and then I'm gonna have people complain that I don't just buy a stock and see the $9 million price target. That's why I don't like talking about meme names, because then everyone's like, oh, you're scaring people. No, I'm not scaring people. I'm a realist. I'm being real. Got the same kind of rhetoric when I was talking about AMC many moons ago. Got to keep it real. All right, so here's a little Better update. Currently at $65.09. We're near my next trigger at $67. Once we break 67, you could get a clean and quick move to 75. So it's not looking bad by any means here. Now, the other day I uploaded a video and I got in down here around like this 55, just shy of the $60 area for this move to the upside. Now, you see we've made lower highs and continued to lower highs here, leaving these wicks behind every single time we've backtested the AEMA. So we're kind of pushing here to the upside, at least intraday. Now, this is obviously... it can move very rapidly. It is only a $1 billion company here, so it's not necessarily a tiny company by any means, but at a $1 billion valuation, or sorry, market cap, you could have a quicker move on this name. So what I'm looking for here from a technical basis is a continuation, again, north of this $67. If we break 67, there's a high probability that we crack 75. So if we crack 75, that is where we're going to reevaluate and go to 99, not 94.06. I mean, you could watch an area there, but getting a markup to 99 wouldn't shock me on Better, assuming we break 67. The key word here is with volume. It needs to break with volume. If it breaks weak, doesn't have a lot of volume, a lot of follow through, then you might be a little concerned. Now, obviously, we had a ton of volume come in on this weekly candle in September. And the volume's been cascading down on the weekly, which isn't surprising because of how much volume we saw come in on this weekly candle from the last week in September. Now, what you want to do is actually compare that volume to prior volumes, this whole little run up here, and notice that the weekly volume, it trends under 1 million. It's actually at like 300,000-ish. Before this big move, you had 1 million, so we had some, decent volume there. Last week we had 7 million. This current week's at 3 million. So if I'm saying I want to move on higher volume, ideally I'd want to see this weekly candle, if it could close out above 7 million, that'd be fantastic. But if it doesn't, at least north of 5 million, and then have the next week's candle with higher volume to continue. Since this is a momentum trade, you need volume behind the move. If there's no volume behind the move, the trade is dead, at least short term, and it will fluff around a little bit before it gets a catalyst. So if you are a momentum trader, you're going to want to watch 67. You're going to want to watch the volume between now and tomorrow, with it being Thursday and tomorrow being the 10th of October, it being Friday. If we see the volume over 67, then you are looking really solid here on the daily and on the weekly for another leg on Better. Hatchet says the back test was also at the daily downtrend golden pocket. I'm assuming you mean this general area. As you can see, I didn't draw a fib or anything, but I assume you mean that general area. Yeah. Oh, did my Tesla stop get triggered? I got an alert. Womp womp. Yep. I got stopped out. Womp womp. That's why we put stops on. Da 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 da. Solid trade though, 28%. Not mad at that at all. Not too shabby. Sorry, I'm just logging this real quick. There we go. Alrighty. Ooh, that reminds me. So, note, I made an error earlier this morning. I told the people in our Discord community exclusive trading that the market will be closed on Monday. That's not true. The market will not be closed on Monday. Banks are closed on Monday. The market's open. So two things you need to know. One, if you're in a cash account, so you're not in a margin account, you may need an extra day to settle. I don't know. You'd have to double check that, but I'm pretty sure you need an additional day to settle. So if any trades made on Friday, you may have to wait until Tuesday before those funds are released for you to trade. because banks aren't open. So that's the first thing you need to know. The second thing you need to know is typically, as I like to say, the market goes lower volume on the weekends, right? Or on the day leading into a 3-day weekend or holiday weekend. I genuinely don't know what to anticipate for tomorrow with that in mind. Meaning I don't know, because the market will be open on Monday, but banks are closed, if the market will have lower volume or not. So that gives you kind of a weird feel. I don't know. We'll see. But it is something to at least be knowledgeable of in the event that does happen by chance. So two things to chew on as you head into this weekend. Sorry, I'm thinking of like 5 things while I'm watching charts and talking to you guys. So if I stutter a bit or two, that's why. All right, we saw the rejection here on Tesla. Shot back down. We're at the 0.786 retracement. I might get back in this. I'm not going to touch it right now. This is a good trade. We'll wait and see. Yeah, market is leaning bearish, and it's just in a bear trend right now overall. Like I warned you guys a little while ago, it's more than likely we're going to get in this pocket here. This 670.57, the 669.37 area before seeing any chance of a reversal. So a reversal could happen, but not really clean yet. Volatility is pushing to the upside. We almost have a 17 VIX. So watch that. And UVXY has also got on track with the VIX. Curling up here pretty parabolically here in the short term, pushing to the upside. You just had like 3 alerts go off, as you could see here. So UVXY is pushing here short term. Hatchet says, news of Tesla being investigated for safety concerns with full service driving also hit half an hour ago. Interesting. NVIDIA getting a little bit of a sell-off. So that, like I said, NVIDIA was your strength today. We're seeing a little bit of weakness here. My Google alert fired. So we're at that level, but the overall market's a little too weak where I don't want to open up that trade yet. In this scenario, I would look for, because of how weak the market is at this point in time, I would be very picky about my entry here. And when I say I'm picky, typically if the market wasn't super bearish, I'm zooming in so you guys can see on the daily chart. If the market wasn't super bearish, I would consider getting in on the low of this candle, right? To, again, give me that inverse head and shoulder look. But the market's leaning pretty bearish right now. It might get a little bit more bearish. So what I'd look for here in this scenario, and again, I'm being picky, is to get in on the low of this candle here from 930. This would allow the head and shoulder, not exactly to be textbook still, but you still have the lowest low here. So I could get in theoretically on the low of this candle with a stop at this candle. So what that looks like is a low, so getting in an entry around 239.25 with a stop just about 70 cents lower. So especially if you're buying contracts with some time, again, there's not a lot of delta risk there. You're not going to lose a lot of delta. You will lose effectively almost like 1 point of delta because it will move down roughly $1, but you're not really going to lose quite a lot in terms of risk to the downside, whereas the risk to the upside, if the market turns around at least by the end of the day, or even if you reverse back to the upside of where we opened today, you got $4. At that point, it might be around $5 of delta appreciation on top of gamma and vega and all the other fun stuff for options. So that's a really solid risk to reward. So just looking at it from an options perspective, you have a 5-to-1 risk to reward on an options trade, taking a logical stab down here on the low of this candle at 239.25. I'm going to put an alert here, and I'll watch that. And if it triggers, then I'll look at it and consider it in real time. Voila. All right, guys, how many likes do we have? We're hitting around time. Only 12 likes. Damn. It's okay. I appreciate you guys' support. Maybe that was a lofty goal. I got a lot to do tomorrow, so I didn't want to set it too low. But I appreciate all of you that took the time to actually like the stream and support me. It goes very far in my mind. Thank you very much. I know you guys love the show. Those of you that are here all the time, I appreciate you guys popping by and enjoying the program. And I hope you continue to enjoy the program as we grow bigger and do cooler things. I have a few ideas coming up for next year, but for now we're going to rock my Bill Nye-esque version of the program, as I like to call it. We'll take one more swing around the market, and then I'll let you guys go for the rest of the day. Again, let's reiterate on SPY, looking to basically stay in this zone before there's even a chance of a reversal. I said that when we were all the way back here at like 671.92. Now we're in that zone. 670.57. Low LOI at 669.37. Watch for this general area to hold before getting any sort of a rally. This is a very important area on the week. So this has to hold for the bulls. If it breaks to the downside, it's no bueno. So keep an eye on this. Volatility has also moved up pretty good. Again, as long as we're north at 1653, you do want to at least consider being more risk off on the market, or do what I did with Tesla. When you get when it moves up in your favor, move those stops up, etc. Like take profit, right? Be smart. VVIX has also moved up, which again makes sense because of how sharply we moved up, and UVXY is also supporting the move here. So volatility on all metrics has moved up today and will continue to move up more than likely. NVIDIA moving down to the downside here. I'm not going to talk about the other mag names because we already spoke about them ad nauseum. Again, you guys know that I'll keep an eye on Google for a potential long entry today as a swing off of that specific candle that I just spoke with you guys about. I think that's it. We'll touch on any other names here. We spoke about NNE. Better. Watch 67. We spoke about that. UUU. We spoke about that. I think that's it. I think you guys got it. We spoke about Path. You guys got a good game plan in front of you. Good setup here. A few good names to watch. Like I mentioned, I think this is going to be a very stock picker oriented market near term here, where momentum trades are going to actually outweigh market performance. Quick, tiny little update on Target for those of you still long Target, like me. Basically, what you want to watch here is 90.97. Again, getting over 90. You saw yesterday you had a nice little push there. Sustaining over 90, I should say, pushes a lot of things in your favor here in the near term for Target. Probably, if we could see some momentum and volume pop over this 90.97 area, you'll tap 94.02 with like pretty quick. Get a nice $4 appreciation on those Target shares. So even from there, it's nice like 5% pop. And again, this is going to be a slower trade, but it's not going to be like a momentum trade where you're making 5% in a day, obviously. I mean, could. But even if you're looking at this from an options perspective, I prefer trading options on this just because the percent gain would be smaller. But I wanted some arguably defensive positioning off that double bottom with Target, and I like the setup here still. So watch 90.97 up for 94.02 for that continuation. I actually just got a pop-up message here that confirms what I said. Deposits and withdrawals will take one additional day to process. So if you're in a cash account, if you executed a trade on Friday, it won't settle until Tuesday. So just be mindful of that if you are trading cash account, that if you execute a trade on Friday, you will not have those funds settled to trade with on the Monday. You would have to wait till Tuesday to actually settle. So keep that in the back of your head. All right, guys, that's going to wrap it up for me for the day. Nice 90-minute or so show with you guys, or 80-something minutes. Hope you guys learned something. Hope you made a little money, had a little fun, right? We have a good laugh here. Drop some yours in the chat. You had a good time. Some yours in the chat. Why you are. I'm going to make a sound. I'm either going to make it or find it. I have not found a your sound. But I'm either going to rip it off a video or I'm going to make it myself. And we're going to hit the your every once in a while just for you guys. Anyway, guys, hope you had a great time. Hope you continue to have a great day. Make smart decisions between today and Monday, essentially. I will let you guys know over the weekend where I'll be going live. I'll put those updates over on my X account and my YouTube, which you can follow. Wait, it's this way. That way. They're right there. So follow me there if you want updates for when next week's shows will be. And don't forget, some will say you need an edge to trade. Well, I like to look at things from a different angle, and that's always what we get right here on the Atomcash angle. I hope you guys enjoy the rest of your day. And remember, precision beats prediction every damn time. I will see you all next week.
The time has passed, and that's a wrap.